Hello everybody, what's going on? Few important updates are coming from news end. Company's founder, chairman and CEO William Lee Bin dropped a massive reality check at 2026 China Chief Economics Fudan Forum. He declared that the Chinese EV industry is entering four distinct new stages, starting with what he calls the most brutal final stage. Now, if you are holding new stock right now or watching from the sidelines as Wall Street debate its path to profitability, this transcript isn't a warning to run away. It is a roadmap for why Nio is positioning itself to win the entire market. So let's break down CEO William Lee four stages, look at the underlying financial catalyst, and uncover why this brutal shakeout is setting up for a massive long term rally. Let's dive into the first point from CEO Lipin. First, most brutal final stage. In the next 3 to 5 years, the final players will be largely determined. Will a particular car company be able to keep up? Will it be left behind? The next 2 years will be a crucial period. This sounds terrifying on the surface. Price war in China have been intense, squeezing margins across the entire sector. But here is the critical distinction. A consolidating phase eliminate weak, undercapitalized player, leaving institutional capital to concrete on the true survivals. The battle of the next 2 years isn't just about selling cars. It is about capital reserves, optional scale, and structural endurance. Neo enters this final stage having already hit massive delivery milestone, topping 100,000 units in second quarter 2026 alone, while maintaining and expanding product metrics. When the dust clears over 3 to 5 years, the automotive landscape won't have 50 different EV startups competing for the market share. It will have three or four dominant ecosystem. Neo is systematically securing its spot at the final table. He mentioned four important things in that meeting. Moving on to the second, this is where the macroeconomic thesis gets incredibly bullish. The penetration rate of pure electric vehicles is accelerating. This year, among all powertrain types in China auto market, only pure electric vehicles are experiencing growth, while plug-in hybrids, extended electric vehicles, and even pure gasoline vehicles are declining. The fundamental reason behind this is that pure electric technology, including quantity of charging and battery swapping infrastructure, has reached an inflection point. Last year, Liebman proposed the pure electric inflection point theory, and this year, sales data has proven his judgment. This addresses the core debate enveloping auto investors for years: BEVs versus EREVs and hybrids. Early on, consumers gravitated towards range extended vehicles as temporary crutch because charging infrastructure wasn't ready. But look at what 2026 market data shows us. Hybrid and ICE vehicles are losing share, while pure battery electric vehicles are the sole engine of the growth. Why? Because infrastructure crossed the tipping point. And who built the most defensible technology advanced infrastructure network in the world? We all know that is NEO. With thousands of power swap stations deployed and strategic partnerships scaling via the Power Swap Partner Program, NEO turned battery swapping from a capital heavy burden into a revenue generating asset. Their battery as a service model completely eliminate range anxiety while lowering the initial purchase price for consumers. As the market shifts permanently towards pure BEVs, NEO's moat expands exponentially. Now let's examine the third shift occurring in the market. The market is transitioning from a period of brand confusion to a period of brand clarity. In past, consumer compared various parameters when purchasing new energy vehicles. But now as the technology becomes more convergent and the actual product experience become increasingly harmonized, the importance of brand is beginning to rise. In Liebman's view, more and more users are starting to choose a car brand first, which is gradually approaching a pattern that has existed in the automotive industry in the past as well. When the tech specs converge, when every EV has fast acceleration, big screen, and solid range, spec sheet marketing dies. The battle shifts to brand identity, trust, and ecosystem execution. Neo understood this before anyone else. They didn't just build cars, they built a lifestyle and luxury brand anchored by Neo houses, exclusive user community, and premium service infrastructure. More importantly, Neo executed a three-tier brand architecture to capture every income bracket without diluting its core luxury identity. We have Neo for premium, Onvo, and the Firefly. By separating these brand identities, Neo clarifies that buying choice for consumers while capturing a raw market share across all price tiers. And finally, let's address stage 4, which reveals the ultimate competitive moat. The competition has shifted from single point competition to systematic competition. From Lee Bin's perspective, relying on a single skill or strength to win in the past is no longer effective in today's automotive market. In contrast, the current competition is comprehensive, encompassing R&D, supply chain, manufacturing, quality, sales, services, and even the capital market. It's much like marathon on a muddy road. It's a race to see who can persevere. A marathon on muddy road, that is the single best metaphor for the EV transition. You cannot win this race with just a cool design or just cheap manufacturing or just good marketing. You need full vertical integration. Neo has spent years absorbing high ups front costs to build out that systematic strength. They have got in-house R&D, proprietary autonomous driving chips, world model ADAS architecture, and smart operating system. They have also got manufacturing scale, energy network, capital market support. I say capital market support because institutional backing and strategic partnership scaling their asset base. So when you look at Neo through the lens of short-term market noise, it is easy to miss the bigger picture. But when you analyze William Lee Bin's fourth stage, the strategic master plan becomes crystal clear. The EV market is shedding its perspective phase. The brutal final stage will eliminate companies that lack full stack capabilities, deep infrastructure, and true brand equity. Neo isn't just surviving this muddy marathon. They build the equipment to run it, with pure BEVs taking over the market, delivery volume climbing month after month, and vehicle margins trending upward. Neo is consolidating its power as an undisputed giant of next generation automotive industry. The road might be muddy right now, but the finish line belongs to the player built to endure. And I think you guys know that who will win in the end. So prepare now. With that said, thank you so much for being here. See you in next one.